The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here, wrapping up 2017. A few days to go. Let's see what happens. Very interesting. A little breather here as we come into the end of the year after spectacular rally in all the indices, most of the indices, the key indices anyway. So we're looking at the E-mini right now. It's made a sort of a cup formation. It's kind of failing on the right here. The MACD is a little weak. The stochastic is rallying, but still way down at 56%. But it held the 9-period exponential moving average over the last this is the third session. Days young, we'll see what happens. But at down minus 1.30 at 2384.50 underneath. Sorry about that. I knew there was something wrong with this picture. That's the picture we're looking at. Up 0.75 on the E-mini. This is the March contract. I had said 2017, only 300 points difference. 2,686.75 up 75 cents in a sideways consolidation. I thought the pattern was so different to what I was looking at. Double top at 2698.00 on the 18th and 19th of December. Hasn't even come back to the 9-period exponential moving average, just going sideways. At the same time, we've got to be a little careful. Yes, Gator, thank you for reminding me. The MACD is just now a little bit dipping to the downside. It hasn't really crossed. I have to wait for the end of the day. It's a daily chart. Stochastic still good at 84%, but starting to weaken. But as I say, still good, above 80%. Weekly chart made a little doji candle last week. I'm going to be watching this real closely because any move above 2698.00 would be very good action. Most importantly, what we're looking at in the 120-minute chart is that we're in a rectangle formation, and that rectangle formation basically says 2682.25. 2682.25 is the key support. Breaks that, we immediately go down to the 2678, 79 area, and that's going to be very important support. Most importantly, what we're looking at is resistances at the 26, about 88 to 89. You can even get to 91, but I think there's a lot of resistance there. I just think this is a very important session in terms of consolidating everything that we've had. It's going to tell us a lot about what's going on, and I'll explain what I'm talking about as we move along. We're looking at the Dow down 15 at 24,738. One of the aspects that I sent out really a lot of charts, but it wasn't so much that I had a lot of charts that I sent out over the weekend. I put in a lot of work in terms of the bigger picture and what we're looking at structurally. Working backwards, the monthly chart is still very strong. Look at this. Huge leg E. MACD is good. Stochastic's flat at 98%, very strong. On-balance volume, as I said before, is becoming a little bit toppy, but toppy doesn't mean to say that it's turned down. The weekly chart had a little candle last week, a little tiny doji candle at 24,876. What's really important about this week, and we've got, 2 hours into the first day of the week, of a shortened week, is if there was a close, I would like to say below 24,697.11, the low of last week. I'm going to make it lower than that. If there is a close below 24,650 this coming week, it's going to suggest to me that the upside is becoming a little bit limited, and that while I'm not saying that we should smash to the downside, I am going to say there's a real good chance that we're going to start to make lower lows and lower highs as January becomes a consolidation month. That's a whole month to go. It's a long time, but that's kind of what I'm looking at. I'm also going to say that if there's a close above 25,110, in the Dow on any particular date, it has to be happen. It's a close. One close above that 25,110 area, and I have to consider that maybe it's choppy, but it's a high-level consolidation rather than lower lows and lower highs. As a result, we're starting to take some positions now, a little different to what we usually take in our perspective here. My trading vehicle, the opening call, that's the daily newsletter that goes out. And I say daily because it goes out Saturday, Sunday, Monday, Tuesday, every day of the week. And what's really important about it is that we haven't yet seen a close under the 9-period exponential moving average since we broke out above it. And this goes back to, what, November the 25th or something, 21st. That was a big move up. And then not even come close to touching it. This is the first time we're about to, I think this week, touch that 9-period moving average of 24,663. So let's see what happens here. Just make it real clear. The S&P, before we run out of time, let me do this. S&P needs to break. It's at 2680.90 up, down minus 2.5. I'm thinking that if the S&P breaks under 2666, that is 14. It's about 150 points down from the Dow, where Dow is. If it closes under that level, actually 2672 will be a close under the 9-period moving average, a real decisive close. But I want to see a little bit more. I want to see it go into this, deep into this candle of the 15th, that big spike to the upside. So that's what I'm looking at. And any break into the S&P, any break into the 2694, I should have put that in. So 2694, 694, so I'll just put fours right now. Any time in the next week and a half, 2 weeks, if there is a close in the S&P above 2702, getting into the 2700s now rather than later in 2018, that would be very positive. But it's this doji candle that I'm looking at. So parameters, very clearly, a close underneath 2672, really 2666 is the level I'd like to see. If there's going to be more downside, that's the level where it will start. And a close above into the low 2700s now in this period would be really positive. The QQQ, now this is where there's a big deal going on. Spent a lot of time over the weekend. I showed the QQQs, I showed the SMHs, the semiconductor ETF. And what I said is that I mentioned it last week, much earlier last week. I said there's a candle called in the Chapman wave methodology. We had studied this in much greater detail in my all-day webinar about 2 weeks ago, and we discussed this candle when it's at highs or record highs or at least a pretty good intermediate term high. If you get that Roman candle, it looks like it opens, has a fractional, just a fractional little wick to the upside, the one that you light, if you're going to light the candle. And then it drops sharply lower, but then it closes more than halfway above the low point. So it creates this particular pattern here. Let me expand it so you can see what I'm talking about. I'll go into the break. It doesn't matter. This is the candle. I even highlighted it in yellow for my subscribers. And I said, if there is a move that goes halfway into the wick and holds there for a few hours, watch out. There's a good chance not only will you test the low, you'll break the low. We are now below the 9-period exponential moving average. I believe that the QQQs have signaled something very important, and that's something we'll talk about when we get back. The Dow's down 20, S&P's down 2 3/4, Qs are down 0.90. I'll be right back. Basil Chapman, very important week. Be right back after this break.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks, we're back. So just let's finish up with the Qs, down 0.91. One of the aspects that I've been talking about for quite some time, when I say some time, I mean for about 10 years, is that if you're looking at markets, if you can learn how to get, I was a professional musician for a long time. I had a dual career, in fact. If you look at the rhythm of the charts, what I'd love to see is the rhythm of the sine wave. In other words, you go from the cup formation in the Qs from the 156.69 high of the 28th of November down to the low of the 6th of December at 152.06. There's a left side, right side price time match, 1, 2, 3, 4, 5, 6 bars down, and 1, 2, 3, 4, 5, 6, 7 bars. Actually, 1, 2, 3, 4, 5. That's the low, 6, and then 1, 2, 3, 4, 5, 6 bars up. Left side, right side price time match, then it breaks out, it goes above, and then all of a sudden you've got yourself an arch formation. Look, there it is. So you not only do you have the Roman candle, not only do you have a failure of a Chapman wave forming X formation, but now you have the potential. And I do say potential, days young, we don't know, but everything about this says the MACD is about to turn down, cross negative, much, much lower internal momentum than it was way back when it made the peak in November. The last time, the 18th at 158.77, was actually failing in the MACD, although it went to the green 9-period differential did cross positive. The price itself was way lower than it was earlier, especially in the red, in the slow-moving average. Now look at the stochastic. Stochastic's down under 80%. The on-balance volumes fading miserably, making a head and shoulders pattern. I think that upside looks limited. I don't know what the downside is. I have a guess, and I'm thinking it through, and that's the reason why I've taken positions there. But on the whole, you don't have a guarantee yet. There are signs that say upside is very limited. Downside is becoming more open, but that's the way it is. Look at the weekly chart, leg D. 1, 2, 3, 4, this is Chapman wave 5, and it's a D. I think all the signs are pointing that if there is a close in the next week and a quarter, could be sooner than that, but let's just say week and a quarter, below 154.80 is the 9-period moving average in the weekly, so we'll make it a close below 154.60. That MACD will close negative, will probably cross negative, and the stochastic, which is at 91%, could pull back to maybe 88%, 87%, still positive. RSI is pulling back, and that's the reason why I'm saying we don't know exactly how it's going to pan out, because within the context of failing dailies, the weekly chart continues to be very strong, and the monthly chart is still in leg C, very, very strong. Let's get to nitty-gritties here. IWM, wow, I spent so much time since last week, and especially Friday, then going Saturday, Sunday, Monday, in the IWM. My analysis here with the IWM is that the Russell 2000 iShares ETF, trading at 153.31, up 11 cents, holding the 9-period exponential moving average, has probably made a cup formation. It had a successful H, then it ended up reverting to the U pattern, or the cup, deep cup pattern. I'm calling this peak C1 on the 4th of December at 155.41. We'll put that in, 155.41, 12.4. And this high right here of what I'm calling peak C2, it's not perfect. Let me explain why. It's at 154.77 on the 19th. So let's go there, 154.77, 12.19. And one of the things is I like the Chapman wave peak C1, C2 failure mode that acts like a peak D to really be nominally below, just like fractionally. I prefer that it's within pennies. I don't care what the price is. I still like to see it within pennies. So 155.41 going to 155.37, I'd say that's perfect peak C1, C2. In other words, that's a phantom peak that is like a D, has everything, the prescription with the stochastic pulling back, the MACD not holding all that well, unbalanced volume pulling back, all says, hey, it has all the characteristics that you'd expect at a D. It hasn't even made a new high in 1, 2, 3, 4 in 4 sessions. So I'm calling it a peak C1, peak C2, but not ideal. So it says IWM is still a work in progress. This is the high, I believe, and I think that's going to be the high for a little while, but there's still buying coming in. Now, I spent a lot of time over the weekend working on the IWM weekly chart. I don't even know where I put it. Is this it? Is this the one? No, this is the 10-minute chart. Don't need that right now. Is it here? Was that it? IWM? Yeah, okay. So this is what I did. I spent a lot of time discussing in detail why this low on the 18th of August at 134.12 in the weekly chart of the Russell 2000, some 11 points lower than it was on the 19th of May, which in the Chapman wave methodology, very strictly, this would say, you've negated any buy signal here. You could continue your wave count if it was like a B and a C is going to a D, and the low was over here, way down over here. That was on the week of the 31st of March of 2017 at 132.40. You can't do that here because you started in your buy mode over here and you took out that low. But every once in a while, for the bigger picture, I didn't have a chance. I'll try to find it. There was a monthly chart that did exactly that, where the right side of an arch formation just took out the left side after a couple of years, and then we went high. Just fractionally took it out, and I had to count it in the end because that's how I got to a D. So I'm saying that it's a rare exception. I do not like to break rules. What are rules for if you're going to keep breaking them? But every once in a while, there is, in fact, a technical aspect to it that says that this low perhaps might not be the low that restarted everything, which would make this A, and this is peak B, but instead says the 134.23 low of the week of 19th of May was the low. We went to an A, we went to a B, then we went to a C/A, because you can still have an alternate count, at 150.68, week of the 13th of October. And that's a D, not a D/B. It's more like a D. That's what I'm thinking right now. We don't know, but I want to be ready at 155.41 the week of the 8th of December. And that would explain that if all the other indices, the key indices, are ready to pull back, I'm not saying crash, I'm just saying pulling back, then we've got to be prepared to say there must be an alternate count, because the IWM, yes, we've seen January have the January effect in the small cap stocks. Maybe we're going to see that now. Look, it's already jumped 4 cents since we're talking. It's up 15 cents at 153.34. But at the same time, I got the feeling that we will not make a new high above 155.41 before we start to pull back a little bit deeper. So I'm saying be ready that the iShares Russell 2000 ETF, the IWM at 153.33 might not have to make it all the way back to 155.41. I'll be right back. We're talking about gold, we're talking about crude oil, we're talking about bonds. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi everyone, Basil Chapman, Tiger Technicians Hour. Dow's down 18, S&P's down 2 3/4. Now, a couple of things going on here. I was asked about Twitter. I just thought I'd do this. In the den, Twitter's made a peak F with the doji candle top on the 21st at 25.56, trading right now at 24.24. I think it's going to pull back a little bit here. It's done very, very nicely. It just needs a bit of a breather because it's gone almost straight up in the daily and weekly charts. I say that the 23.20 to 22.70s, if there is going to be a deeper correction, that should be the area. But you've got that gap that has a low of 23.13. So I would not be surprised if over the next week or so it tries to bounce. One of the reasons why I said it should be pulling back is that although the MACD and stochastic and the weekly charts are really strong, just as they are on the daily, and the monthly's been improving, is that it got repelled at the 200-period moving average, which is at 25.88, made a high last week of 25.56, 30 cents lower. And I think it's just going to digest these gains. It's had a tremendous move to the upside. Percentage-wise, it's spectacular, going from the 15s to the 24s, 25s. It just needs a little bit of a breather. So if you're long, I'd say, you can take a little bit of profit now. I try to keep the core position. I'll probably be thinking of adding it back. As I say, give it about another point or so to the downside. It might not do it, but that's kind of, you asked me about it, and that would be my risk reward. Would say that's the area that I'd probably think of putting it back. I don't know if I will, but I'd take something off, and that's where I'd be looking. So that's that. And the next thing I was asked about. Now let me go through this. Gold is up $8 right now. This is really good action for two reasons. One is it went to the 200-period exponential moving average, and over the weekend I had this kind of a mea culpa. I saw all this going on, and I thought, the dollar is still holding pretty well. We are along the dollar, it's holding nicely. Everything about the weekly and monthly charts of gold was saying to me it needs a little bit of time. So I did an analysis of the GLD, and what I'd said was there's a good chance that the GLD could try to hit. Now, let me just move this up because now leg B. Remember, this is called a floating letter because it's making every following bar has got a higher high. So this is a gray leg B, and it's really a leg, not a peak yet. It has to be called a leg in the Chapman wave. And what I had said was there's a 1-to-1. I showed this particular chart right here. Let me just put it in a little bit greater detail. There it went from this candle was the high, that's the target. But I like to bump when I'm doing my left side, right side price time match very often. I like to bump into what I call the Grand Canyon shear drop, that wall right there. So I took it from here, not from this candle. That would have worked a little bit, but it would have been a little bit early. And then we would have been late to the party there. And what I'm looking at is this candle of the 29th. So I take my left side to the low point of the 12th of August. 12th of August. That should have been the 12th of, was that 12/8? 12/12. So this is 12th of December. 12th of December at 117.40 in the GLD. This is a Spider Gold Trust, trades at 1/10 the price of gold. And then I take that and I said, look, you went 1, 2, 3, 4, 5, 6, 7, 8. 9 bars coming down. There should be 9 bars going up. 1, 2, 3, 4, 5, 6, 7, 8. And the 9th bar today hits exactly the challenge bar. But can it go a little higher? Can it go to this level right here of 122.43? Well, we're already at 121.81. I think so. But what I said was the mea culpa on my part is that gold was doing everything that I look for. It made a low, the unbalanced volume shot up, it crossed, the stochastic crossed positive with a nice candle. The MACD, that was the one thing that was kind of putting me off a little bit. The MACD had a huge way to go to cross positive, but my rule of thumb is the stochastic and the price start a stochastic buy signal when it crosses positive. When it goes to 20%, it raises the stochastic to a buy mode. That's got nothing to do with whether you're buying or selling. It's just saying, hey, that's in a buy mode. See what the price is doing. Price was acting very well. And then the MACD crossed positive right here on the 20th of December for a Chapman wave buy mode to be in place. And that's saying, yeah, now there's a good chance that you're going to go to a D. So I'm saying, okay, now I have to wait for a pullback to see whether or not I want to go in. Some of the gold stocks that we're looking at, ASA is one that I usually use as a benchmark. Sometimes we buy it, sometimes we don't. Look, it did everything. It even crossed quicker to get the buy mode right there. I just didn't believe it, that's all. Sometimes we're human. Unfortunately, we're human, and we don't often go with the tactical signals 100%. So here's your left side, right side price time match to the high that was made in ASA, which is a gold stock. ASA Gold and Precious Metals Limited. I think it's out of Bermuda. It's 5 or 6 South African gold stocks. 1143 was the high on the 27th. So yeah, we go and we go. We've got, why did I put that in there? Okay, we've got, that's the high. And now you want to go to the left side, right side. Price time match. That's it right there. So we have 2 days to go to try to test 1127. That was the high. And I have a gap, which I'll have to use. I usually like to use a trough on the left side for my left side price time match. So this is what we're looking at here. That's the Chapman Wave inside wedge target resistance line. So yeah, it's my fault. Everything was there. I just didn't believe it. I just thought, you know what? I think there's a little bit more strength in the dollar, and it's going to stall, and that gold will have to come back and retest. Hey, you could still do that, but in the meantime, this is really good action. This is a gray leg B right now in the daily, leg A in the weekly. You see, the weekly is still it's showing signs of strength now, but on a purely technical basis, this is weakness. Stochastic still under 20%. The MACD still has not crossed positive, hasn't even gone positive in the 0% line. But I am going to have to call that an A. But the monthly chart still looks pretty poor. So that was my mistake. Sorry, subscribers. I should have done it as a trade and say, you know what, it's a trade. If it fails, it fails. But everything's there to say we could even go to a buy mode. And so here we are. So the next thing I was asked about, here we go. XPO. XPO has had a phenomenal move. Look at that. Huge. And XPO is the XPO Logistics Inc. It's in the oil something or other business, isn't it? XPO. Transportation. Oh, that's right. It's in transportation. Logistics. It's in the transportation area. So this is A, B, C in leg D. Weekly, A, B, C, D, E, F in the monthly. Fantastic candle on Friday, and it's kind of following through with a high-level consolidation, down 92 cents, 89.09. So the question is, what's the question? What wave count? So let me just do this quickly. I guess we're going to go to a break now. I'm going to have to take it all the way back. A, B, C, D, E, and it starts again. A, B, C. This is a leg D. I'll do it again during the break, but this is yet another D, but it's a spectacular candle from Friday. That's a high-level consolidation. This is really looking good. I'll finish up during the break, and then we're going to go to the transportation index. Caterpillar, I want to do JP Morgan, etc., the banks, and the Qs. Yep, everything there that I want to deal with. We'll be back.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So let's just go through that XPO, which is XPO Logistics, trading at 89.12, down 89 cents. Yeah, I've got this as a leg D, maybe a peak D today, high-level consolidation in the daily. Leg D in the monthly, still very good technicals, and a huge leg F. I'm calling it an F for now. In the monthly, really strong. So we'll keep an eye on that. It's a very good action. Next question was the IYT. IYT is, in fact, pulling back from peak D daily, a leg D weekly, and a leg E monthly. We'll see what happens there. Question about GE. GE's up, it's up 2 cents. It's just acting very poorly. I just don't think it's ready. I got a feeling in the first quarter, end of first quarter, beginning of the second quarter, there's a chance that's when EE really gets going to the upside finally, but it just needs time. I spent a lot of time over the weekend looking at certain charts. Caterpillar was one of them. I featured it and I said, Caterpillar has just been extraordinary. Deer and Caterpillar, look at Deer, look daily leg E, weekly leg D, monthly leg E. Look at Deer. Deer is acting, they're G/C daily, F/B weekly, G/C monthly. Both of them are actually acting extremely well. And this is part of commodities. It's part of, it's all sorts of things. Caterpillar, I mean, there's, tractors and everything. Bobcats, whatever it is, Caterpillar does in terms of the industrial use as well as agricultural use. So this is something to watch. And I said, is this a short? No, I wouldn't want to short it right now. I'd just rather let it play out and see what happens. If it's going to be a short, it's going to be a news event, and that news event is probably going to impact the market. So at this particular point, at 98.33%, $1.67 off the 100%, which is never reached in stochastic. This is incredible action. Could flatten out and stay here for a while, but I'm watching it because until Caterpillar breaks and closes under 151, 151.66 is a 9-period moving average. I'm actually going to say until it closes in the 149s, Caterpillar is just an extraordinary stock. I believe that it should probably make a high-level consolidation, and if it's a deeper consolidation, that 144 level in the 9-period moving average of the weekly chart, that's going to be absolutely key. I see limited upside right now, but at the same time, I'm seeing lower lows and lower highs as kind of a worst-case scenario in a sideways action. If there's an inverted V-shaped pattern, there's going to be a news event. I'm not sure if Caterpillar has come out, when it comes out with earnings or whatever, but if there is any news event, it's going to be, has to be a quick smash under 149, and then I'd say, uh-oh, Caterpillar's in for a timeout. But at this particular point, could take a breather rather than a timeout. Next question is crude oil. Yeah, so this is very important. USO, leg C in the daily, leg F, I'm calling it an F for now in the weekly, but look, it's holding the 9-period moving average. The MACD is good. The stochastic is holding at 89%. And that monthly chart, United States Oil Fund, is actually about to go to above that recovery high of 12.45 back in June of 2016. It's acting very well. And the question was, crude oil breakout over 60 could see 90. So you see, I can't go that way. I just can't do that. I can't go from 60 up 50%. I can say, based on my chart that I'm looking at, and this is a different chart to what were we looking at the other day. You remember we had a call from John in Boston, and we were looking, and then I said there are different charts, and then I said, oh, that looks exactly like the crude oil chart that keeps getting shown to me, which is different to mine, and I wrote it down. Oh, it was USN? No, was it not? Oh, I haven't got it. There was another ETN to do with oil. Was that New York? I'll find it because I did write it down somewhere. I'm just not finding it right now. Oh, did I write it on this page? Let me just have a look. BNO, there it is. BNO, I think that's BNO. Is that BNO? Brent. There it goes. Okay. So look, you see the Brent chart is broken out to leg C. And that's what I've been shown many times. I said, I just can't go. Trade stations usually very accurate. And I'm staying with this chart, and I'm correct. USO and crude oil continuous contract have one set of chart formations, and the BNO, which is the United States Brent oil fund, that's different. And that looks like the chart that people show me, and that's what you're looking at. And that's very positive. In fact, that's just broken the trend line to the upside. Whoa, look at this. You've got a look at that. You've got yourself a beautiful up channel right there in the BNO. I'm going to keep thinking, what was that from Boston? BBN, was that Bucking? No, that's the school. But what was that high-tech company, part of MIT? Anyway, so here we go. There's a trend line, and that trend line says that BNO trading at 17.97 up 41 cents should test resistance at 18.84. That's an up channel. And that's going to be very positive, because as soon as that works out, I can start drawing a left side, right side price time match from here to here. Ooh, that takes a long time. All right, well, that's the way we're looking at it. So the question then is Brent, BDO. I don't know about BDO. Let me see what BDO is. BDO. No, I'm going for BNO. BNO is what I've got. BNO is what I'm using. United States Brent Oil Fund, and that's it. I'm done. So that's in leg E, very strong. Has it restarted? I'm not sure. Everything about the daily, the weekly, and the monthly is so far very positive. And that, I'll give you support. 17.42. It's at 18 right now. 17.42 to 17.20. And in the USO, the support, if there is a pullback at any point in the next week or two, the support will come in, and it's only in leg C, right at the gap between 11.70 and 11.57. And I don't know whether this is a recycle to the upside in the weekly chart. It looks kind of like it might be, but I'm not going to go that far just yet. BDO. No, it's Balls, Beranek, and Newman. BBM. That's what it is. Woohoo! The old cells are still there. Good, at least for the moment. Right there in Cambridge on Route 16, that was Storrow Drive or whatever. Okay, so next question I had was JP Morgan. So let's go to JP Morgan. JP Morgan is probably down a little bit. Yeah, it's down 94 cents. I did some work on these over the weekend. I spent quite a bit of time doing the XLF. The XLF is really my benchmark. And what I said last week was, I'm drawing in this oval pattern. Yes, it looks like a Chapman wave stalk leg formation, but this has a different connotation. Remember, I drew it in here, and I said, be careful, because this, if it's going to fail, and usually at an F, it's going to fail, F for failure, that's going to be an arch formation. And then last week I said, if there is a pullback in the XLF, the financial S&P Select Spider Fund, I'm not doing anything until it pulls back underneath this low of the 15th of 27.63. What I said to subscribers is that 27.50 is hit, there's a real good chance that regardless of what I'm thinking in terms of rates go higher and bank stocks go higher, this is different. We didn't see that last week. The rates were soaring and we didn't go higher. In fact, they went sideways, if anything. So I think this is a different connotation, and I think that the XLF is going to digest the gains. We'll be back straight after this with a question about the Qs and a question about, I'll be back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Don't forget, folks, great programming coming up, and I'm going to go straight to Ari in Arcadia. Thanks for being patient. Ari, how are you?
Pretty good. Happy New Year, Basil.
And Happy New Year to you. So you are still in Franco-Nevada Corporation?
Yeah, if you remember, I called you last time.
Right.
You and I spoke right the day before the peak.
Right, and you said you're starting to think of taking something off, right?
Yeah, I took off my whole trading position.
Okay, good. So now, are you back in or not?
Started buying around 76.
So, okay, 76 on the low. Very good. And the low was 74.87. Very good. And it's trading at 78.97. You know, this is one of the reasons why when I was looking at at the different gold stocks, I thought to myself, I would not be surprised if gold actually fails because not all the gold stocks, even now, not all of them are participating as well as they should. Look, Franco-Nevada should really be at about 82.50. It's at 78 right now, just based on what has happened to the others. So I'm looking at this, and I think this is having a tougher time. I don't know whether it's the mix that they have. I don't know what it is. Maybe it's a fundamental thing. But on a purely technical basis, I think that, yes, you got in at a great point. I'm just going to say to you, I'd have to give it a little bit longer, like 3 days. But I'm just saying to you that if Franco-Nevada, FNV, trading at 78.95, up 45 cents right now, if it starts to trade underneath 77.50, if it goes under 77.50, I'm thinking that this is not one of those that's participating very well. I'd be a little bit careful, and I'd say, you know what? This might have had its big run, and it's just taking a well-deserved timeout while others are playing catch-up. So that's the only thing I can say. What you want to see, today's Tuesday, by Thursday afternoon, even in the next day or two, we should see some kind of at least a daily pullback in gold, and then maybe push it higher. But if by Friday, on Friday's close, if it's not close to 80 or preferably 80.75, I think it's kind of stalling, so that the longer term picture is still very positive based on the monthly, but I'd just be a little careful. I don't know if that helps you, Ari, but that's the way I'm looking at it.
Raise my stop, that's all.
Okay, thanks for calling, and good luck with FNV, Franco-Nevada Corporation. Folks, I'll be back a little later on with Tom O'Brien. Stay tuned. You've got great programming coming up. Steve is next.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.